Good afternoon. My name's Tony Cardenas, and this is the Indianapolis Real Estate Market Weekly Update. Today I'm sitting here with Kyle Morris with FC Tucker, Justin Griffith with Keller Williams, and also Kara Shipman with Epcon Communities. And we're going to be talking about the Courtyard of Carmel here towards the end of the show. Shelly is out today because she is selling homes or doing something like that. And we're going to talk about the stats. And let's kick off with Hamilton County today. Tell me what's happening in the Fishers market, please.
So in the Fishers market last week, 65 listings went on the market, right? So we're going to talk about it a little bit later. There's kind of been a little bit of a start to pivot of the market, right?
Shift in the market.
Yeah, absolutely. And so ironically, 33 of those houses that went on the market last week are still active, right? Now 32 of them have pended, but that's the first time since we've been doing this that more in any community that there's been more actives than there are actually pended for the week. Now, like, not as a misnomer though, but like that doesn't mean that's all that's on the market though. There's actually 66 total on the market in Fishers. It's just that the rest of them have been on the market, right, for longer than 7 days.
Sure,
right?
I got it.
Noblesville is still a little bit low. So we've seen a big uptick in Fishers. We've seen an uptick in Carmel. Zionsville and Noblesville stayed about the same. So Noblesville, there was 34 listings that went on the market last week. 17 of them are still active. 17 of them pended. So 43 still actually total on the market, and that was anywhere from 150,000 to 1.6 million. For Fishers, the span was 165 to 1.5. In Carmel, once again, there was a higher number. There were 63 that went on the market last week, right?
Right.
So as we're entering the selling season, we got through Mother's Day. You know, we're just seeing that uptick that we would usually see. 25 of them are still on the market. 28 of them pended. But in Carmel, there's 73 houses still on the market total, right? So there's quite a bit that's been on the market.
So the market has really shifted.
Yeah. One of the ones, though, in the price range, so it was 211 to 8.9 million.
Of course.
Right.
Yeah.
The 8.9, like, I really feel like we should just, like, let's just be nice and round it to 9 million, right?
Absolutely.
So it's a projected build in Laurelwood. It looks very beautiful, though. So, and then Zionsville is typically low anyways, and so there was 17 that went on the market last week. Only 5 of them are still active, 12 have pended, but there's 23 total houses on the market in Zionsville, anywhere from 270 to 2.7 million.
Well, let me ask you guys this, okay, Justin and Kyle, what are you guys seeing? What's changing the market right now? It's not all interest rates, is it?
I think interest rates are playing a little bit into it, but right now it's just it's the selling season. Right now, spring break or summer break's about to happen. Families starting to look, so they're starting to list their homes, and I'm seeing a little uptick in inventory right now.
Yeah, a little bit of buyer's fatigue too. I think that happens. You know, people tried to get into the market a little bit earlier, like they did last year. Right, it kind of started into March. It started more like into February this year, and so there's just some fatigue. The rates, I don't think the rates have had a major play in it either, quite honestly, yet. Even though houses are selling over list and it's still competitive, it's less offers, right? Mm-hmm. So like you may still get like 40, 60 over, but it's against 7 offers instead of 17 offers, right? And so, I mean, I know that's still frustrating if you're the person losing out to like an $80,000 over list offer, but you can't look at the numbers and say that it's not transitioning. Like just the sheer volume of offers that you're getting is showing it. You know, that we have more that are staying on the market over a week. It just shows it. Now, that doesn't mean the market has totally changed. I just think it's the signs that there's hope on the horizon for buyers, but I also think it's evidence to tell the sellers like this is kind of the ideal time to make that decision and sell.
Absolutely, and every week it seems like the rates are going up more and more, so your buying power is actually going down. Even if prices stay the same, it's going to be costing you more if you're holding out, so still a good time to get in.
Yep.
Rates are going to go to what, 6 probably?
Well, we're at 5.5 to 5.625 right now on a 30-year fix, but the biggest thing is people have to understand if they're putting 20% down, they got to run over to a 5-1 arm or to a 7-6 arm. All right, because you can jump out here. I'm looking at the board right now. You can get yourself a 5-year arm at easily 4.750%. That is way under what a fixed rate is. And on a 7, you're going to be hitting the market at 4.875% right now, maybe 5%, but you're locked in for 7 years. It's on a 30-year AM, and you're getting yourself qualified for a home. You're talking about $500 difference a month on a $450,000 home.
Yeah. And FHA's lower now, right?
Oh, FHA is definitely lower right now, but You know,
but then you run into like your offer being competitive, right? So
Yep.
it's just a really dynamic situation to be in right now. It's kind of like what we always talk about, like why you need a professional to help you with this, just because how do you write the most competitive offer, but still at the same time beneficial to you?
yeah, it blows my mind that somebody would really want to sell their home by themselves without a real estate agent. They're costing themselves money. And the other side of the fence, you know, these investors, everybody thinks when they're buying a home from an investor that they're getting top dollar. They're losing money at this point. They're losing $30,000, $40,000, $50,000 a month. Greg Cooper said this 5 weeks ago. We've talked about it before. You're losing money if you're using an investor. If you're a home seller here in the Hamilton County, Marion County area, if you're not using a realtor, you are not getting your full dollar for your house, in my opinion. What do you think, Justin?
I absolutely agree with that. And something else that's kind of what we were talking about earlier with the sales right now. I saw 3 listings this week that were best and final by Sunday at noon, and all 3 were still listed. So it's definitely taken a turn, and you're probably going to start seeing those drop-off listings now. It's a little different than last year.
We mean next Sunday, evidently.
Yeah, exactly. The next Sunday.
Okay, Justin, let's swing over to you. What do we have in the Indianapolis market?
This week in Fountain Square, we had 13 new listings, 4 of which are pending, and we currently have 31 active in Fountain Square. New listing prices were averaged around $349,000, and we had 3 closings this week that were at $358,000. That is a little bit lower than last year, or a little bit higher than last year at $348,000. Bates Hendricks had 7 new listings at $272,000 on the average, 5 of which are pending, and there are still 9 currently active. Those 9 active averages are about $237,000, so that market's still staying pretty steady right now. Transitioning to Broad Ripple, we had 7 new listings, average price around $329,000. 3 of which of those are pending, and we had 6 closings at $302,000 this week, which is actually lower than last year. Last year we were about $313,000.
Wow.
Yeah. And then lastly, Meridian Kessler, 15 new listings over $400,000, 11 of which pended at a $450,000 average. And last year we were at $430,000, so it's up a little bit this year as well.
You know, it's interesting when you're talking about Bates Hendricks, though, because, you know, you say 7 listings and it sounds like not very many, but that's such a tight area. Like,
Yeah.
I wonder per, like, actual, you know, the map of the area compared to, like, a Fisher's or whatever. Like, I would say,
yeah.
I mean, that's an insane amount, actually, because, I mean, that's like a 10-square block area,
Yep,
right,
yep.
at best, right? It's even smaller than Broad Ripple, and Broad
Absolutely.
Ripple has, you know, even less houses than that. So it's
Yep.
actually a lot for that area.
Well, we got to move over to new construction here, okay? And we're going to talk to Kara Shipman with Epcon Communities. How you doing today, Kara?
I'm doing great.
Tell us a little bit about your community.
Sure, absolutely. So our first community that we released is called the Courtyards of Carmel. We are right at Smoky Road, just east of Keystone. So in general, to give you guys a high-level concept, we are luxury ranch designs with a lifestyle community. So clubhouse, pool, fitness center, bocce ball, pickleball, those are pretty consistent in all of our communities, especially the Courtyards of Carmel.
And that's 55 plus?
This one is, yes. So this isn't age restricted. So 80% of our community has one person in the home that's 55 or older. 20% can be outside of those guidelines.
Okay. And so how many have you sold in your community already? And how many are you selling in your how many units you going to have?
Yeah, so total will be 149. You know, we'll be here for a few years building. We just started selling middle to end of November of last year. So since then, we've released 42 home sites, and those have been sectioned, right? We don't release
Right.
them all at once. We've sold 36 of those. So as of hopefully, you know, plan for tonight, those will be one less. We'll have one less available.
I won't be moving there, but Justin, you're right around the corner. No, I'm just kidding you.
I'd buy there if they let me. I think it's an insane investment to get in Carmel. I just don't think there's anything like this. We've got other communities that are like this, but not as centrally located as Courtyards is.
Do you have a lot of buyers that ask you about 55 plus areas through your experience in the last 5 or 6 years? I mean,
I would
have they been
say-
asking for, like, up in Hamilton County, is there a place to buy?
Well, it's kind of limited, right? And
Absolutely.
historically, it's been kind of hard. I would say I've had more of it in the past 2 years than I'd had in the previous years. I think that's just the aging of the market, so to speak, right? As people are trying to downsize or whatever, and they can finally downsize at a really good situation because they're going to get so much for their house, and so they can buy this really, really nice house. But there just hasn't historically been a ton of options in Indy. And when they do have them, you know, some of them that, you know, I'm aware of, you know, they're like way further east or they're way further west, right? And there's just not much that is actually centrally located.
Yeah, Kara, you guys have got a unique situation. I mean, how many people do you get a week coming in there? Is it just packed on the weekends, or
Oh,
how's it been
absolutely.
working out?
It's worked out really well. We had a really strong interest in the very beginning before we even released. I mean, before we even officially were able to sell homes, I think we had a interest list of 300 people that had just been reaching out to us, joining our VIP web lead list. So since then, it's remained steady. We have a lot of people that are watching and waiting until we have something to show. Our model is under frame, and we've started construction on a handful of the other homes. So we've seen an even higher uptick in interest recently.
Absolutely. When do you think that you'll be in your model?
That's a loaded question.
October, November?
We're hoping for August.
Oh, are you? Okay.
August
okay.
is what we're shooting for.
Well, they're building another model over at Sunrise on the Monon, and they're way behind on this thing. And I don't think they're going to be in it until, it looks like it's going to be December or January. So
It's tough for new construction.
There
right
is,
now.
and there's still a supply and demand issue out there with a lot of these builders. It's not only about not getting the wood. That's not the problem. It's the drywall, it's the fixtures, it's the windows.
Well,
everything is behind.
And I was having a conversation yesterday with some other agents, and so there's actually, I haven't experienced it yet, but with some builders, they're putting a clause out there, like how do you absorb this cost of like what's it going to be? And so I've seen it two different ways. Like I've seen where you can pay a 10% premium up front, right, and that's what, to absorb any extra costs, or you can take a risk and you 50-50 it with them. And so it could be lower if the prices don't go up the same amount as the 10% would be, but you're also taking a big hit if it goes up even higher.
Which way would you go, Justin?
I'm not sure. That's a risk that would probably be taken on an individual basis, I would
Right.
think. I mean, it's just it's kind of
comfort
a tough
level.
pill to swallow right now. And I've actually had a few people that were interested in building that have actually looked at, existing homes now just for the fact that they were worried about the delay with their current situation. So,
Kara, what are you guys doing on situations like that? Are you building in a premium in case of anything changes on the price?
It's a combination. It's a balancing act, right? So we're doing a fixed price contract. So should our vendors and our prices go up, that doesn't get passed on to the client. So the advantage for us is you're able to sign a contract and you don't have to worry about paying anything extra once you do move into your home. The way that we counteract that is we are controlling how many home sites we're releasing at a time, right? Part of that challenge is when you get too far out in advance and you're selling too far out in advance, people are sitting in contract too long. So for us, we're balancing that, and we're getting to a point in Carmel where we are getting pretty far out in advance and we may need to pull back a little bit. So as long as we're balancing those factors, we feel confident our prices are fixed for our clients and they don't have to worry about any of those escalation.
So what's your
risks.
bottom price, top price? I mean, obviously that varies. And then what's what your average price is that you're seeing consistently built? Now, obviously that's limited and a loaded question as well because it's early in the community, and a year from now it's probably going to be 20% higher. But I'm just curious, what we're seeing, mainly because I have somebody who's interested. So
Yeah, so today we could start from the high fours in Carmel. More realistically, I feel more comfortable saying low fives, right, when it's all said and done. But starting in the low fives, and you could get up into the millions. So we have one right now that's, a few that are a little over $1 million. Mm-hmm. So what we try to do is offer product that if you want to get in at 1,600 square feet, you can get in at 1,600 square feet. Ranch on a slab. If you want more space, right, you want something more luxury, you want something that's a little more grand, you can certainly do that. You're in over 4,000 square feet, and then you're getting into the $1 million price range. So we have a good opportunity for people that are looking for different product, but are really driven by that lifestyle in the community.
I want that lifestyle.
absolutely. Yeah, absolutely.
You could be part of the 20%.
I just don't want to mow my yard anymore.
None of us do. I know one guy that doesn't want to, that's not talking on the show today. My buddy, Tim. It's my neighbor. He hates cutting his grass, and my other buddy hates cutting his grass. But,
He just doesn't like mowing his grass because you're out there and then you're going to bug him, I think.
well, that's really true. No, his grass looks good because of me. All right. Kara, tell everybody how they can get a hold of you, and if they want to reach out to you, maybe through you and Shelly, how could they find out about prices and information on your project, please?
Sure. So epconcommunities.com is your first stop. Shelly Walters has been a great supporter of ours, so I would absolutely recommend reaching out to her. You could also reach out to myself, Kara Shipman at epconcommunities.com. Those are two great ways to reach out to us.
Okay, thank you. Justin, how can they get a hold of you?
Best way to reach me is by phone, 317-507-5599. Call or text it damn near anytime.
What's the name of your company?
Keller Williams, Indy Metro Northeast.
Okay, and how can they get a hold of you, sir?
Call or text anytime, basically the same. Unfortunately, I answer all the time. It's 317-649-5122. I will say, to piggyback on Kara, though, if you want to just stop in and visit her, it's behind the old marsh right by the World Market.
Yeah,
so you can
thank
go
you
in
for
there
that.
and you can go
Yes.
kind of see some tangible items and kind of, I don't know, put eyeballs on kind of like some of the options that they're talking
Absolutely.
about.
Yes, thank you for that. We're open every day from 10 to 6.
And Kyle, what's the name of your company?
FC Tucker, but Morris Property Group's the team. So.
That's Morris Property Group, FC Tucker. Okay, hey everybody, thank you for the show today. We appreciate all the information, and we hope Shelly's on the show next week. Greg Cooper will be on the show later this week. Thank you for listening to the podcast, Indianapolis Real Estate Market Weekly Update. This show has been brought to you by PRMG Mortgage in Carmel, Indiana. If you're looking for rates, just go to www.americasbest.mortgage. That's americasbest.mortgage. Also, look at Executive Portfolio Homes magazine. That's executiveportfolio.com.